Alright folks, let's talk trade wars. It's a topic that has dominated headlines and affected economies around the globe. Remember back in 2018 when President Trump slapped tariffs on China? It was a bold move that sent shockwaves through the international trade community. He called it the art of the deal, but this wasn't some New York real estate deal. This was a high-stakes game with global ramifications. This was a global economic earthquake. Markets around the world reacted with volatility, and financial analysts scrambled to make sense of the new landscape. Suddenly, Chinese goods got a whole lot more expensive in America. Consumers felt the impact almost immediately as prices for everyday items began to rise. The goal? Bring back manufacturing jobs to the US, or at least that's what the White House said. The administration hoped that higher tariffs would incentivize companies to produce goods domestically. But there was collateral damage. Many American businesses, especially those reliant on imported materials, found themselves struggling to cope with the increased costs. American businesses and consumers felt the pinch of higher prices. Small business owners voiced their concerns, and shoppers had to adjust their budgets. The global economy got jittery. Investors watched nervously as stock markets fluctuated, and economic summits became arenas for heated discussions. And China? They weren't exactly thrilled retaliating with their own tariffs on American goods. This tit-for-tat escalation added fuel to the fire. It was a classic standoff, but with billions of dollars at stake. Trade negotiations became more intense, and the world watched closely. This wasn't just about trade deficits, it was about power, influence, and who gets to write the rules of the global economy in the 21st century. The stakes were high, and the outcomes uncertain. American farmers in particular felt the brunt of the trade war. With China being a major market for U.S. agricultural products, retaliatory tariffs hit them hard. Soybean farmers, for instance, saw their exports plummet, leading to surplus crops and financial strain. Many farmers voiced their concerns, hoping for a resolution. The tech industry wasn't spared either. With many components manufactured in China, the tariffs disrupted global supply chains, affecting production and prices. Economists debated the long-term effects of the tariffs. Some argued they were necessary to address unfair trade practices, while others warned of prolonged economic pain. As the trade war dragged on, there were efforts to find common ground. International trade agreements and negotiations aimed to ease tensions and restore stability. For American consumers, the hope was that any short-term pain would lead to long-term gain. The promise of a stronger domestic economy and more jobs was a powerful motivator. The world watched as the US and China navigated this complex and contentious issue. The outcome would shape the future of global trade and economic relations for years to come. In the end, the trade war was more than just tariffs and trade deficits. It was a battle for economic supremacy, a test of political will, and a defining moment in the history of global trade. As we look back, it's clear that the trade war left a lasting impact. The lessons learned continue to influence trade policies and economic strategies worldwide. The world of trade is ever evolving, and the story of Trump's tariffs is a reminder of how interconnected and interdependent our economies truly are. As nations move forward, the hope is for more cooperation and less confrontation, for the benefit of all. Because in the end, a stable and prosperous global economy is in everyone's best interest. And that's the story of Trump's tariffs and the world. A tale of conflict, consequence, and the quest for economic dominance. Now, in the midst of this trade war chaos, a window of opportunity cracked open, and guess who was peeking through? India. See, for years China had been the world's factory floor, churning out everything from iPhones to sneakers. But with Trump's tariffs throwing a wrench into the works, companies started looking for alternatives. Enter India, with its massive workforce and competitive labor costs. Suddenly India looked like a pretty attractive option to set up shop. The trade war forced a reconfiguration of global supply chains, and India was well positioned to capitalize. Of course, becoming the world's next economic superpower isn't as simple as waiting for a trade war. India had its work cut out for it, but the potential was there waiting to be unlocked. Prime Minister Modi, always the savvy operator, saw this opportunity and jumped into action. He knew that navigating the choppy waters of the US-China trade war required finesse. India couldn't afford to alienate China, a major trading partner, but it also couldn't miss out on the chance to woo American businesses looking for an alternative to Chinese manufacturing. So, Modi played it smart. He engaged in direct talks with President Trump, aiming to soften the blow of tariffs and open up new avenues for trade between India and the US. It was a delicate balancing act, but Modi was determined to strike a deal that worked for India. Section 4. Hog-wild Harley-Davidson finds a new road. Remember Harley-Davidson, the iconic American motorcycle manufacturer? For over a century, they've been a symbol of freedom and the open road, with their roaring engines and distinctive designs capturing the hearts of riders worldwide. However, in recent years they found themselves caught in the crossfire of a global trade war, which threatened to derail their operations and legacy. The Trump administration's tariffs on steel and aluminum significantly increased the cost of raw materials, making it more expensive to produce their motorcycles domestically. This was a major blow to Harley-Davidson, which prides itself on its American-made heritage. To navigate these turbulent waters, Harley-Davidson made the controversial decision to shift some of its production overseas. This move was aimed at avoiding the hefty tariffs and maintaining competitive pricing for their bikes in the global market. President Trump was not pleased with this decision. He publicly criticized the company, accusing them of abandoning their American roots and betraying their loyal customer base. Despite the backlash, Harley-Davidson stood firm. The company's leadership knew that in order to survive and thrive, they had to make tough decisions that would protect their financial health and ensure their long-term viability. Protecting their bottom line was crucial. The company had to balance the rising production costs with the need to remain competitive in a rapidly changing global market. So, where did they decide to set up their new production facilities? The answer was India, a country with a burgeoning middle class and a growing appetite for premium motorcycles. Yes, India. This strategic move allowed Harley-Davidson to bypass the tariffs and tap into one of the world's largest and fastest-growing markets for two-wheelers. The deal was mutually beneficial. Harley-Davidson could continue to produce their iconic motorcycles without the added cost burden of tariffs, while India gained a significant boost to its manufacturing sector and solidified its reputation as a destination for foreign investment. For Harley-Davidson, this move was not just about avoiding tariffs. It was also about expanding their global footprint and reaching new customers in a market that was ripe for growth. The Indian market offered immense potential, with a young population eager to embrace the Harley-Davidson brand. Meanwhile, for India, hosting a renowned brand like Harley-Davidson was a significant achievement. It showcased the country's growing capabilities in manufacturing and its attractiveness as a hub for international businesses. This partnership was a testament to the benefits of globalization and strategic business decisions in a complex economic landscape. As Harley-Davidson continues to navigate the challenges of the modern world, their story is a reminder of the importance of adaptability and resilience. By finding a new road, they are not only preserving their legacy, but also paving the way for future generations of riders to experience the thrill of the open road on a Harley-Davidson motorcycle. The journey of Harley-Davidson is far from over. With their eyes set on new horizons, they are poised to continue their legacy of innovation, freedom, and the spirit of adventure. The road ahead may be uncertain, but one thing is clear. Harley-Davidson is ready to ride into the future with confidence and determination. Section 5. Trade Wars and Winners India Cashes In. The Harley-Davidson deal was just one example of how India benefited from the trade diversion effects of the US-China trade war. As companies sought to diversify their supply chains and reduce their exposure to tariffs, India emerged as a major beneficiary. A 2020 study by the United Nations Conference on Trade and Development, UNCTAD, found that India was among the top gainers from the trade war, with an estimated $755 million in export gains. The report highlighted how the trade war created opportunities for countries like India to increase their market share in sectors like chemicals, electrical machinery, and furniture. Section 6. The road to superpowerdom, paved with good intentions. So, India was clearly in a prime position to capitalize on the US-China trade war. The shifting dynamics of global trade presented a unique opportunity for India to step up and fill the void left by the two economic giants. With its strategic location, vast resources, and a growing workforce, India had the potential to become a major player on the world stage. But becoming an economic superpower requires more than just being in the right place at the right time. It demands a comprehensive strategy that encompasses various sectors of the economy. From manufacturing to services, from agriculture to technology, every aspect needs to be aligned towards a common goal of growth and development. It requires a whole lot of hard work, smart policies, and a little bit of luck. The government needs to create an environment that fosters innovation and entrepreneurship. Businesses need to be agile and adaptable, ready to seize new opportunities as they arise. And the people need to be educated and skilled, capable of driving the economy forward. India had a lot going for it: a young and growing population, a burgeoning middle class, and a dynamic tech sector. These factors provided a strong foundation for economic growth. The young population meant a large workforce that could drive productivity. The growing middle class meant increased consumer spending, which could fuel demand for goods and services. And the dynamic tech sector meant innovation and technological advancements that could boost efficiency and competitiveness. And a dynamic tech sector. The tech industry in India was booming, with startups and established companies alike making significant strides in areas like software development, artificial intelligence, and digital services. This sector had the potential to not only drive economic growth but also position India as a leader in the global tech landscape. But it also faced significant challenges. Bureaucracy, corruption, and inadequate infrastructure were major roadblocks on the path to economic dominance. The red tape and inefficiencies in the government could stifle business growth and innovation. Corruption could erode trust and deter investment, and the lack of adequate infrastructure could hinder productivity and increase costs. And inadequate infrastructure were major roadblocks on the path to economic dominance. The country's roads, ports, and power supply needed significant upgrades to support a growing economy. Without these improvements, businesses would struggle to operate efficiently, and the economy would be unable to reach its full potential. To truly leverage the opportunities presented by the trade war, India needed to address these challenges head-on. This meant implementing reforms to streamline bureaucracy, combat corruption, and invest in infrastructure. It also meant fostering a business-friendly environment that encouraged investment and innovation. India needed to address these challenges head-on. The government had to take bold steps to cut through the red tape and make it easier for businesses to operate. It had to crack down on corruption and ensure that public funds were used effectively. And it had to invest heavily in infrastructure to support economic growth. It was time to roll up the sleeves and get to work. The road to becoming an economic superpower was long and challenging, but with determination, smart policies, and a bit of luck, India could pave the way to a prosperous future. The journey was just beginning, and the world was watching to see if India could rise to the occasion and seize the opportunities that lay ahead.